Good morning and welcome to AMS 2023 Reinsurance Market Briefing.
Monte Carlo is once again playing host to the global reinsurance industry at the annual Rendez-Vous de Septembre. And there's plenty for underwriters, brokers and investors to discuss. AM Best's analysts and senior executives are on hand and they presented their latest thoughts on the market to a packed audience during the Reinsurance Market Briefing.
We've been hosting the Sunday morning reinsurance briefing here in Monte Carlo for well over 20 years, and it's a tremendous opportunity for us to connect with the participants in the market, many of whom are organizations that we provide ratings to, that we see on an annual basis at the annual management meeting, but to see them more informally here, to find out about how their business plan is progressing in the current year. It's really a great opportunity for us to get the pulse of the market, and then also very importantly for us to explain to the market participants our analytics, how we're seeing the drivers of the rating decisions play out, from whether it's the balance sheet strength issues, operating performance, the profile of these organizations, or their enterprise risk management.
One of the central topics was the availability of capital.
We don't see actually that shortage of capacity. What happens is that the way that capacity has been deployed has become much more cautious. What we see is reinsurers maintaining a very robust financial strength. All the indicators of liquidity are still very strong. What we see most likely is the companies which are already very well positioned in the market to be able to expand and redeploy that capital, whereas for brand new startups, the environment is still very challenging.
Delegates also heard AM Best's thoughts on inflation and the impact on reserves.
What we have seen this year is a number of major players announcing specific reserve increases or reserve strengthening for inflation. The overall impact of reserve movements was still a positive contribution to earnings. I think that's going to be a very interesting one to watch. I've been predicting that when inflation rises and when interest rates rise, then we may see some of those, the benefits of strong reserving in the past unwind.
The key driver there is where the margins are. Yeah, and in previous years, we've seen, primary companies have been in a better position to generate those margins, and that hasn't gone unnoticed. Reinsurers have been trying to take advantage of those opportunities as well.
And on investor appetite.
This is a marketplace where you don't see changes in the order of the leading players. And I think that's probably largely down to the fact that the business is very heavily dependent upon relationships, and that longevity of relationships is an important part of the business. And in that disorderly market where renewals were left to the last minute, there was a lot of very tight negotiations. Some of those companies that you'd say were outside of the top tier, some of the perhaps newer, smaller players, played a very aggressive game, particularly on price. And for cedents, that potentially left a bit of a sour taste in the mouth. And I think in a relationship-driven business, that is something that will augment those top players' positions in the top slots. We don't think that there will be necessarily a significant class of 23 or 24. Existing players able to flex their balance sheets, able to raise capital when they need to. We don't see that there's likely to be a significant new wave of entrants. Over the course of the last year or so, we've seen lots of new business plans, and we've seen lots of management teams potentially talking to us about a rating for startup reinsurers, but we've seen very few actually come to market. And the reason for that is investor appetite seems to have changed dramatically. The existential threat of alternative capital seems to have gone away completely. And now if you look, almost all of the major players are making some use of alternative capital themselves.
For AM Best TV, I'm Richard Banks.